So hello everyone and welcome to the day 11 of our miscellaneous insurance course. Today we are diving into specialized insurance that's absolutely critical for the construction and the infrastructure sectors, that is contractors all risk, that is CAR, and erection all risk, that is EAR insurance. These policies are designed to protect huge projects from various perils. We will explore their purposes, what each one specially offers and covers, and why they are a non-negotiable for anyone involved in building or setting up large structures and machineries. So what exactly are CAR and EAR insurance? Both are all risk policies, meaning they cover any unforeseen and sudden physical loss of the damage unless specifically excluded. They are designed to protect the actual construction work and materials being used and the equipment on site during a project. CAR, this policy is specifically for civil construction projects. Think about building houses, offices, roads, bridges or dams. It covers the risks involved in these types of constructions. EAR, this policy on the other hand is for the erection or installation of machinery, plant and equipment. This could be setting up a new power plant, a large manufacturing line, or a complex industrial machinery. Duration. The coverage of both EAR and CAR typically starts right from the beginning of the project and continues until its completion and handover. It often also includes a maintenance period afterwards to cover any defects that might arise during that time. CAR and EAR policies have two main sections. The first is property damage cover, which protects the physical assets of the project. It covers the works under the construction, the actual physical structure or the installations as they are being built or erected, like the walls, foundations or the pipelines. It also covers the materials and the equipment on the site, all the raw materials intended for the project such as cement, steel and cables, as well as the machinery and the equipment being used like excavators and cranes. The perils covered are on all risk basis, meaning they cover almost anything unless specifically excluded. This includes fire, lightning, explosions, collapses, accidental impacts, natural disasters like storms, floods or earthquakes, and even man-made perils like burglary, theft, malicious damages, human error, carelessness or lack of skill by the workers. The sum insured for this section should always be a full contract value of the entire project to ensure complete coverage. The second crucial part of the CAR and EAR policies is third-party liability cover. This section protects the insured, usually the contractor or the project owner, from legal responsibilities if their construction or the erection activities accidentally cause bodily injury to someone else or damage to someone else's properties. Example: this could include scenarios like debris falling from a construction site and injuring a passerby on the street, damage caused by a neighboring building or property because of your excavation work, or accidentally damaging public utilities like water pipes or electrical cables during your project. This coverage typically has separate financial limits for bodily injury claims and property damage claims, meaning there is a maximum amount the insurer will pay for each type of the incident. It's vital to understand the key exclusions and important considerations with CAR and EAR policies. Willful negligence of the defects, losses due to the deliberate neglect or known defects that were not fixed are not covered. The policy won't pay for the cost of simply fixing faulty workmanship itself. However, it will cover any subsequent damage that is caused by that faulty workmanship. Consequential losses is important. CAR and EAR covers the physical damage to the project. It does not cover the indirect losses like loss of the profit due to the project delays or the penalties for not finishing on time. You need separate insurance for that. Normal aging or use of the construction equipment is not covered. Defects in material or the design that are inherent to the item itself are typically excluded unless they lead to a subsequent accidental loss. War, terrorism, or nuclear perils are standard exclusions, as with most of the policies. Maintenance period, while coverage often extends to a maintenance period, is usually limited to the covering only those defects that are discovered during that period but originated from the construction work itself. Under insurance, if the total contract value you insured is less than the actual project value, your claim payout will be reduced proportionally. So always insure for the full value. So why are CAR and EAR policies are so important for construction projects? They are truly the cornerstones of the project risk management. First, the large financial exposures, the construction and the erection projects involve enormous financial investments, making them highly vulnerable to unexpected cost. Second, the complex risks. These projects have faced a huge variety of the risks, from natural disasters like floods or earthquakes to human errors or the equipment failures. So CAR covers with wide spectrum. Third, they are often called contractual requirements. Project owners, lenders, or even local regulations frequently mandate that these insurances are in place before a project can even begin. Fourth, it ensures project continuity. So, by covering financial setbacks from the unforeseen events, these policies help projects stay on track financially, reducing delays and cost overruns. And finally, they protect all parties involved. These policies typically benefit not just the main contractor but also the project owner and even subcontractors, providing a shared layer of security. So that concludes our session on the contractors all risk and erections all risk insurance. They are complex but indispensable covers for the construction world. Now I'd love to hear from you. Considering the faulty workmanship exclusions, why do you think it's fair that CAR and EAR policies don't pay to fix the bad work itself, but they do pay for any damage that caused by the bad work? What's the logic behind this distinction? Share your insights in the comments below. Thank you so much.